What if I told you that most traders are only paying attention to half the story? They obsess over price, the what, but completely ignore the most powerful confirming indicator, the why. The why behind every price move. That why is volume. Welcome, everyone. Whether you're a day trader, swing trader, or long-term investor, by the end of this video, you'll understand how to use volume to stop guessing and start knowing where the market is likely headed next. Stick around, because we're about to unlock the secrets of volume reversal analysis. If a stock moves up on low volume, it's like a quiet, empty room. Anyone can shout and make an echo. But if it moves up on high volume, it's like a packed concert hall cheering. The move has conviction, it has passion, it has participation. My mentor teaches that volume is the fuel in the market's engine. No fuel, no sustainable move. His entire method, which he calls volume reversal analysis, is designed to identify moments when this fuel is either flooding into the market or completely drying up, signaling a potential change in direction. Let's get into the nuts and bolts. Leibovit breaks down volume into several key signals. These are the building blocks of his analysis. 1. Volume precedes price. This is the golden rule. Often you'll see a spike in volume before a major price move. The smart money is starting to position itself, and their activity shows up as volume. The crowd follows later, pushing the price. 2. Climax volume buying, selling climaxes. This is a huge one. A climax is an exhaustive, emotional event. Selling climax, a massive down day on huge volume. It represents panic, capitulation. Everyone is selling. But once everyone who wants to sell has sold, who is left? Leibovit says this often marks a significant bottom. Buying climax, the opposite. A massive rally on gigantic volume. Euphoria, everyone is buying. Once the last buyer is in, the party's over. This often marks a top. 3. Volume dry up. What happens? After a move, if a stock pulls back, but volume is very low, it suggests there's no real selling pressure. The big players aren't distributing. They're just taking a breather. This often sets up for the next leg up. Conversely, a low-volume rally is suspicious and likely to fail. 4. The volume pulse. Leibovit looks for a sustained increase in volume over a period of days, not just a one-off spike. A healthy pulse of volume confirms the strength of a trend. Okay, theory is great, but how do we use this? Let's talk about the practical system. Volume reversal analysis, or VRA. This is how it identifies potential market turns. It's a multi-step process. Step 1. Identify a volume spike. Scan for those climax events we talked about, a day where volume is significantly higher than the recent average. This is your alert that something important is happening. Step 2. Determine the volume reversal day. A volume range day is the specific day where the climax volume occurs, and the price closes near the extreme of its range for the day. A selling climax volume range day would be a down day closing near its lows on huge volume. A buying climax VRD would be an up day, closing near its highs on huge volume. Step 3. Wait for the test. The most important step. Leibovit is adamant. Do not buy the climax. This is where amateurs get wiped out. After a selling climax VRD, the market will often rally a bit, a dead cat bounce, and then come back down to test the lows of the VRD. Step 4. Analyze the test. This is the magic. When the price returns to test the VRD lows, you must look at the volume on the test. Bullish sign. If the volume on the test is dramatically lower than the volume on the original VRD, it confirms the selling exhaustion. The big sellers are gone. This is your high probability long signal. Bearish sign after a buying climax. If the price falls back to the VRD highs on very low volume, it suggests no one is left to buy, confirming the exhaustion. This is a short signal, so you've identified a valid VRA setup. Now what? You need a plan. The trade entry. You enter on the confirmation, the low volume. Test. Don't anticipate. Wait for the volume to confirm the story. Stop loss placement. This is critical. Tight risk management. Your stop loss should be placed just below the low of the original VRD for a long trade. If the price breaks below that exhaustive low on significant volume, your thesis is broken. Get out. Profit targets. Yu doesn't use rigid profit targets. Instead, he uses volume to exit as well. You should consider scaling out. As the price moves in your favor, watch for new buying climaxes on the way up. These can be signals to take some profit. If volume starts to dry up on subsequent rallies, it might be a sign the move is losing steam. The ultimate exit signal would be the formation of a new opposite VRD. Remember, the goal isn't to pick the exact bottom or top. The goal is to catch the meat of the move after volume has confirmed a high probability reversal. Before we wrap up, let's talk about context. The VRA works on all time frames, from intraday charts to weekly and monthly charts. A VRD on a daily chart might signal a swing trade lasting days or weeks. A VRD on a weekly chart could signal a major market trend change lasting months. The key is consistency. Apply the same rules. Also, VRA works best when it aligns with the overall market trend. Trading a VRA long signal in a primary bull market has a higher success rate than trying to fight the trend. Be patient. VRD setups don't happen every day. Wait for the highest quality ones. Focus on major indexes ETFs. You can primarily use this on the SPY. The principles apply to stocks, but the signals are often cleaner in the major ETFs. Practice first. Go back on your charts and label historical VRDs. See how they played out. Paper trade the method before risking real capital. This isn't a get-rich-quick scheme. It's a disciplined methodology that requires patience and practice, but it gives you a framework to understand the market's underlying mechanics, to see what the smart money is doing, and to dramatically improve your timing. If you found this masterclass helpful, do us a huge favor and smash that like button and subscribe to the channel for more trading education. This really helps us out. Now I want to hear from you. What's your biggest challenge with volume analysis? Let me know in the comments below. Check out these videos on screen for more trading strategies. Thanks for watching. And remember, trade smart, trade with volume confirmation, and I'll see you in the next video.